All right, ladies and gentlemen, we're back with the end of the PulseWave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger Report. So today was a typical Monday, not a lot of price action, and just a little feeling out process. So let's take a look at what we got. So we have the bonds here looking at TLT, and you got another inside bar. All right, so no upside production from this past rally alert, but this is only day two. And the alerts can lead the market out the wave somewhere between, 3 to 5 days out. All right, before you start to see any upside production. All right, so we'll see what happens. Now, the last one we had upside production immediately, then it dropped off, pulled back, and then we got another buy signal and the market took off. So we'll see what happens this time. Bottom of the Kumo cloud, though, is still in play as the advantage goes to the bulls right now. It's still in the bulls' corner to make something happen in the bond market. Taking a look now at gold by way of GLD. And as you can see here, the market did inch a little bit higher today, not explosive or anything like that. I think the market's just setting itself up, though, to back and fill because a lot of these markets gapped up last week. So the gap has not been satisfied. So I think the market's just getting ready to come down and fill this gap. It may overshoot a bit and get to the bottom of the Kumo cloud about $155 a share. So just be prepared for that 155 support. I think that's what you're going to see in GLD. As far as silver is concerned, looking at SLV here, pretty much the same picture. You got this gap up from November the 4th, and here you are with more upside today. But again, the reason why I don't think the market's blasting off with parabolic bars is because the market knows it has to back and fill this gap. So you should have support around the $18 level for SLV, and we'll see what's up. All right, so that's what's up. Hey, Brandy, I haven't seen you in a minute. How you been? What's up? Good looking out. Good to see you. Let's see what else we got. Okay, Russell. Let's look at this Russell. Now, I did go ahead and take small positions. I got long the NASDAQ and the S&P today, I believe it was. And now we got sell signals. So I'm preparing for this because I don't think the downside is going to be, too long. I think we'll just back and fill and then whatever. But nevertheless, I'm preparing to stop and reverse if I have to. We got a crash alert on IWM for tomorrow's trading. All right. So the gap is all the way down here, though. All right. So I believe that the market will briefly dip below $180 a share. But because you really never know and you're in a bear market, any sell signal you get in a bear market is a major signal. And 9 times out of 10, you can expect significant movement. So the market can overshoot and say, oh, by the way, your bear market rally is over. So you never know if this means over or if it just means temporarily over. So gotta be ready for the sell-off here in these equities. Here is the NASDAQ 100. And again, I took a small long position in both the NASDAQ and Russell today, but I'm preparing to stop and reverse if need be. Now, here is the QQQ, the NASDAQ 100, and you got a sell signal here for tomorrow as well. Again, you got to come all the way down here to the $270 level, which is where your support is currently at. And I think that's where the market will dip to. So that's the possibility of a $15 down move. That's huge. Okay. So you got to be nimble. And right now, the market's saying if this bear market rally is over and the bear market wants to come in and hit new lows or test the 52-week low, then so be it. You just got to be ready for it. If it just says, oh, no, I'm just going to fill the gap and then I'm going to reverse and get long again, then that's fine too. But can't ignore a red signal in a red market. So bear market signals are flashing around. Looking at oil by way of ticker OIH, we got a big nasty red bar too. Okay, so we got a sell signal here. as well. So for tonight and tomorrow's trading, I'm expecting these to start to show some signs of weakness. Here is the S&P 500, the SPY. Again, you got the gap here in the Kumo cloud. Right now, you're at the top of the cloud. This has the potential to go down and test the bottom of the cloud of 375. So again, you got the possibility of a $20 down run in the S&P 500. So be ready for that one as well. If you're looking for clues, let's take a look at something we don't normally look at. That's the SVXY. If there's a clue here, let's see if we can find it. Okay, so the SVXY has a buy signal. Very interesting. It's giving out the buy signal here. But it has a gap here as well that it needs to deal with. So I'm thinking that the market may just come down here, test this, stop short around the $52 mark, back and fill this, and then take off. This is not a very strong bullish picture because you got the red coming up in here. You got the selling starting to pick up. So it looks like this rally is coming to an end in the stock market, at least temporarily so. What about the US dollar index? Well, here's the tradable. The ticker is UUP, and it's already fallen out of the Kumo cloud and is now in a state of free fall. All right, you have no support. You have no idea where this thing is going to crash and burn to. Right now, it is just falling, which is what we told you way back here with the crash alert the week of September the 28th. Then you got another crash alert on the week of October the 17th. And then you got another crash alert the week of October 21st. And then you got another crash alert the week of November the 1st. And then you got another crash alert. This is the week of November the 4th, and then you got another one back to back the week of November the 7th, and that's your last crash alert on November the 8th. So yeah, you've had crash alert warnings up here, and then the market just gave you all that downside production. I don't see that changing anytime soon. What about the UVXY? Is it giving us any clues? Well, here's your UVXY. And as you can see here, it's just falling. It's just weak. It's bearish. It can't get up. You just had a crash alert 2 trading sessions ago, and now you're starting to get that downside production. So not really getting any real clues. You would think, though, that if the market was really going to pull back heavy, that you would get at least a buy signal here, but you're not. You're just getting more weakness. So I don't know what is going on here, but hey, the market does what it does. Another interesting one to look at is your miners, your mining stocks, and this is ticker XME. And we got a crash alert for tomorrow's trading. $47 is going to be the initial support and the initial target point for profit. And then the bottom of the Kumo cloud will be number 2. So that's just something to look at and think about as we're moving forward this week. And of course, here is your Bitcoin futures. And you can see here, the market is consolidated. You had a rally alert followed by a crash alert, which cancels each other out. And now the market is just showing consolidation and weakness. All right. So this is the consolidation bar right here. And you see price action staying within that range. So the market is trendless at this time and just moving sideways. And if you look at Ethereum, Ethereum is the same way. Your consolidation bar is right here, and price action is staying within that zone, within that region. So just a neutral market position overall. Taking a look at the Dow, we didn't look at that one. Here's the Dow. And as you can see here, we got that crash alert here as well. So, and that's after hitting, weekly highs. So back to back, the last 3 trading sessions hit new weekly highs, and now we're getting this crash alert. So if this is going to be official and saying that the bear market rally is over, that means the market's about to have a pretty big fall. Now let's look at back here. The last crash alert came the week of August the 17th, 2022. Now, the diamonds, the DIA, the Dow ETF, closed at $340.20. Today, we closed at $335.77. So, technically speaking, for you chartists out there, this is a failed double top. The close of this bar is less than the close of this bar. Now, the high on this particular bar, though, hit 342.06, and this one hit 339.87. So this is a lower high and a lower close. This bar is a lower high and a lower close of this bar. Back to back major sell signals. The last sell signal we got was back here the week of September 13th. That's the last red bar signal we got. And look at the downside production that followed, right? Pretty major. All right, so that's what it's looking like, folks. I think this is what we got to look forward to. This is what we got to think about as we move forward. It's looking like the markets may be topping out in the stock indices for now. I think primarily, though, I think the market's just setting itself up to back and fill those gap ups, and then I think they have a stronger potential to rally from there. But because the markets always like to overshoot, I think once the market fills the gap, it may just go ahead and test the top of the Kumo cloud. So there's a strong possibility for that. But either way, you got to trade what the market gives you. So with that being said, smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And if you've been lazy, you need to go to PulseWaveTrading.com and take the 14-day challenge. Trade alongside us for 14 days for free. See how much money you can make over these next 14 days. I think you will surprise yourself at just how easy it is to follow along with the reports. And with that said, I'm out. Peace.